Hello, this is Ahura from OTET Markets. We'll be with you with a short review on the global economic outlook in the week ahead. As always, let's first check what we had previous week, and then we can go through and check the economic data we had in the week ahead. Previous week, compared with the week before that, we had somehow a little better than expected data. And while generally it was a light week, we didn't have too many data, but those data that we had, they were better than expected, and also they were very important data. On composite and service PMI front, most of the data that we had, PMI data that we had from developed and developing economies, including China, Japan, UK, United States, most of them, they were better than expected, and generally they confirmed that economic growth is progressing, even if it's slower, but it's progressing, and we should not be too much worried about the crisis. Maybe the soft landing, maybe, but not crisis. Generally, the data, they were positive in all of them, especially if you go and check the China, the data we had from, especially from the inflation numbers that we had and service PMIs from the China, confirmed that the inflation is again started to increase from negative territory that they had, which is going to be a positive news for the Chinese stock market and generally for the Chinese economy. Week previous that, a week before that, also Chinese central bank, they cut their rates by I think 10 basis points, and generally market sentiment in China little bit get better and positive right now, and after the several months of the negative data and pessimistic data, now we had previous week we had a little bit better than expected sentiments. So we had inflation numbers from several other economies, including Russia, including Mexico, and including Turkey. In most of these, that in all these countries that we had inflation number previous week, inflation increased in July after the June weaker than expected inflation or slower inflation. In July, inflation again started to increase. That means that we should not forget about the inflation risk still, because even thought that it comes a little bit in the line that the central banks they were expecting, and we had a lower inflation in most economies, but still we should be careful about that, and we should be careful about what's going to happen in the next months. As I told, in July, inflation again started to increase. That was the most important data that we had, most of the data that we had from the previous week. And for the week ahead, the inflation in United Kingdom and United States will be most important data. Actually, we have inflation from France and some other European countries as well. In United States, first let's start with United States. For the United States, Tuesday will be very important day with the Tuesday and Wednesday with the producer price index and producer price index or the producer inflation, and Wednesday's consumer price index or consumer inflation. Producer price index expected to increase by 0.1% after the 0.2% increase in June. In July, we're expecting to see the 0.1% increase in inflation, but which means that in the next months also the inflation pressures will be lower. We will have less pressure from the inflation side. But on Wednesday, we will have the consumer inflation, which is expected for after flat inflation of the previous months. For July, we're expecting to see 0.2% progress in both CPI and core CPI. Both of them are expected to increase by 0.2%, which means that on annual scale, core CPI should fall to 3.2% from 3.3%, and headline CPI should supposed to fall to 2.9% from 3% that we had previous month. On Thursday, from the United States, we will have the import-export, and as always, import-export price index, and as always, initial jobless claims and continuing jobless claims numbers. But focus will be again on Wednesday and then on Friday's numbers, where we will have the housing starts and housing permits and housing starts, which will show how the economy is increasing. You know that because housing markets and house markets is very important for the economy. It's one of the those parts that they have more employees, they have more buy and sell, which means for the GDP will be very important. So the construction business is very important. If you see the construction business is increasing, means that the economy is increasing. Based on Mr. Powell's comments 2 weeks ago, in the second quarter, we did have almost zero investment progress in the investment in the construction market, which is not a good news for the economy. That was one of the reasons that the market was counting on this, at least not the recession, at least a soft landing in the next months. Those are the most important data that we're expecting to see from United States. In United Kingdom, we'll have the GDP numbers on Thursday, and then we will have the inflation numbers on GDP numbers. We'll see GDP numbers on Thursday, and then we will have the inflation numbers on retail sales on Friday. Inflation numbers have already been had actually. Let me see the inflation numbers, sorry, on Wednesday. Wednesday, Thursday, and Friday will be very important days for UK. On Wednesday, we have to see what will happen for inflation in July. We now in May and June, inflation repeatedly was steady at 2%, and now we're expecting to see the inflation is increasing towards 2.3%, which is still very good progress in the United Kingdom. And then on Thursday, we will have the GDP numbers for the second quarter, and we're expecting to see a better than expected positive data to see the increase in inflation. GDP is increasing in the second quarter, and after negative numbers that we had in the fourth quarter last week, the first and the second quarter, they're going to be a little bit better than expected, better than previous or initial expectations that we had at the beginning of the year. And then on Friday, we will have a retail sales numbers, which again, very important for the United Kingdom economy, which more retail sales, more sales means people are getting more buying, the economy is getting more activated, and GDP also supposed to increase in the second quarter. That's from the UK. I told about the United States, UK, and from the China. Next week for the China will be very important, especially Thursday. Thursday, we will have fixed assets investment, industrial production, Chinese unemployment numbers, and all those numbers, they were very important. They will show us how we should expect, what we should expect from the Chinese economy. After that, last week we had a progress in PMI numbers. We should now see how the industrial production is improving and how the labor market data is in China. Generally, we're expecting to see a little bit better than the previous month's data. Generally, we're expecting to see progress in the Chinese economy, and especially on the Monday also we have to watch the new loans numbers. While as much as new loans increasing means that the businesses and the people, they are more positive about the future economy, so they can afford to get the loan, which is generally the positive data for economy. Don't forget that on Tuesday in UK we will have the labor market data as well. We are expecting to see the unemployment rate to increase to 4.5%, while the average income is supposed to fall to 5.5%. This is generally the average income, including the bonuses. The speed of increasing is supposed to fall to 5.5%. This is the general data we had from the UK, and from the and don't forget on Wednesday we will have a central bank meeting in New Zealand. New Zealand inflation is slowly falling. In general, the economic data is fine, but the generally economic data are fine. But economic growth, but despite that numbers are fine, still the economic growth is very weak comparing to previous years. And last year, the economic growth is slowing. That's why we have been expecting that central bank in New Zealand to start cutting the rate in July. Now, most probably in July, they will hold the rates as inflation again increasing in Australia, inflation again increasing in China. They have some doubts about the future of this future of inflation. That's why most probably this week they will hold the interest rate at 5.5%, and most probably they will give a clear sign about the rates cuts starting from the next meeting. This is the most important data that we'll have from most economies in the next in the week ahead. But let's check the charts. This depends, and giving these data, then the numbers that we told them, we talked about that. US dollar index expected to move positive slowly between 102.70 and 103.60. This is the average that we are expecting to see the US dollar index in the week ahead. Generally, we do not expect the US dollar to increase so fast or to fall so fast. Generally, right now, we have to believe about the overall soft downtrend, but this overall soft downtrend should not be just like in this week should not go further lower than 102.70. So the US dollar can move between 102.70 and 103.20 or 103.60 around these levels. This area that we're expecting to see US dollar index in the week ahead. On the gold front, let's check the gold chart. Gold generally is expected to continue to rise while the generally the geopolitical tensions is still high, and that can hold the gold safe haven demand, that can increase the gold safe haven demand. And at the same time, we are not so much positive about the earnings report, so that can again increase the gold demand, while because bond yields also is falling, so we should not if comparing between the gold and bonds, gold is getting a little bit more attractive, but still we are not expecting to see so big numbers for the gold, but still this overall soft uptrend can continue towards 2,455. On the oil front, last week we had EIA short-term energy outlook as well. They were expecting to see the oil price between $80 and $85. Now we're expecting to see the oil price again rising above $76 this week, something between $76 and $80. It's our target for the week ahead mostly, but between $78 and $80. That's what we are expecting to see during the next week. And again, what else we have on the stock markets? Yeah, let's check the stock markets. SP 500. Where is my SP 500? Where is that? Stock markets. If we consider the possibility of the rate cut in September, that's going to be big good news for the stock market and support the stock market. But at the same time, the economic growth is slowing, and the concerns is getting more down. And earnings reports, they were very slower than expectations, and all of them, they put the pressure on the stock markets, and S&P 500 cannot move further towards higher, but most probably we can see the S&P 500 to get back again to its overall downtrend and to fall under 5,250 next week. This is the general market and market condition. Again, if you had any other question, please don't forget to write down in the comment section. I'll try to get back to you as soon as possible and reply on your question. Have a good week ahead. Bye.